Welcome back, everyone. This is JP Trades with Nordic Alpha Trading. And in today's lesson, we are going to go into Market Structure 101. This is going to be a very brief overview of how I look at market structure and how I map out or chart market structure. I have some specific rules and some mechanical ways to mark out and chart market structure. And this is going to lay the foundation of everything else moving forward into smart money concepts as well as order flow. Now, this is just a brief explanation. This is not going to get very detailed. It's not going to get very nuanced. I'm saving all of the nuance for my course and my one-on-one mentorships because it's going to be at least a couple hours of videos. And it takes a greater understanding to encapsulate years of seeing this on the charts in different ways, in different time frames, and on different assets, and through different markets. So let's hop into it and let's quickly go over uptrend and downtrend. You probably have seen this. The market only moves in two ways. It moves in uptrends and downtrends. So uptrends are a series of higher highs followed with a series of higher lows. Every break of structure will be followed by a higher high to higher low. And the downtrends are a series of lower highs with lower lows. Each break of structure in that downtrend is followed by the lower low and then the lower high. Now, moving over to market structure shifts. This is going to be what you want to see as a reversal, meaning that your uptrend is changing into a downtrend, or basically your uptrend is over with. This market structure shift is telling you just that the market structure is shifting from an uptrend to a downtrend. Now let's get into my mechanical rule. This is called the 2-candle rule. And I want to do a quick shout out to WP, one of my mentors years ago that taught me this rule. And this is going to teach you how to map out market structure that is significant versus insignificant structure. And that rule is, if this was an uptrend, we are seeing that we're going like this. That means every time you map out structure, you want to see structure have two down candles or two bearish candles. In this case, they're gray candles. In the most charts, you'll see them as two red candles. Now, the second candle, it has to be two consecutive down candles, but the second candle has to trade lower than the first candle. If you have this second candle inside this first candle, that is an inside bar. We cannot use an inside bar. It has to trade lower than this first candle's low. So that is the basics of mapping out market structure and how we're going to learn it moving forward. Now, in this example, I'm going back to the green and red candles so everyone can see this clearly. And in case you're using stock color candles, it will be relatable to you. So let's go to a 4-hour and let's just mark out some market structure. We can clearly see this high. And using our 2-candle rule, we know coming from this high down to this low, we have to see two up candles. Now, in that example before, when you're in uptrend, you're looking for two down candles. Downtrend, two up candles. Uptrend, two down candles. Now let's start. So we have your very first high, which you put in, which is the very high. Now, what you do is find the next low that is followed by two up candles. Do we have two green up candles here? No, we don't. Do we have two green up candles here? And the second one is trading higher than the first one? Yes, we do. So now we have your low. Now, we cannot confirm this as your higher high just yet, even though it clearly looks like it. When we don't see everything to the right like we do now, because this is back testing it, you are here in real time. So you do not know if you're going to breach the high or the low. So the question here to ask yourself when you are right here and you see price coming up in here, you have to ask yourself, do we see the break of structure at this low or at this high first? Obviously, we did not even trade higher than this high. We traded right here, lower than this low. However, do we have two up candles here? No, we do not. So this is insignificant structure only on the 4-hour time frame. Now, if we go down to the 3 or the 2-hour time frame, these candles will be broken up into more candles, and you will more than likely get that. But right now, let's stick to the 4-hour time frame and follow our mechanical rule. We did break here, but it was an SFP, no problem. Did we get the two up candles here following this low? No, we didn't. Now we go to this low. Did we get two up candles here? Yes, we did. So this is our low after this full on break. So then that confirms this as our lower high. Why? Because this is the highest point in between this low and this next low. So our path will continue on down here. Now, on the 4-hour structure, we ask ourselves again, did we break this low or did we break this high? We have done neither yet. So that is our 4-hour structure. Everything that is inside here is internal structure to your previous high and your previous low. Now let's go back. Let's do this uptrend. So we start at the low, and we can see already that we have two down candles. The second one barely traded below that first one, but it meets our rule. So now that we have this low and this high, do we break this low or do we break this high first? We don't even breach this low, but we do break the high. So we know that we have next. Do we have this high followed by two red candles? Yes, we do. Now, what is the lowest point between this high and your new high? It would be this low. So again, we have our situation. The question to ask yourself is, do we break this high or do we break this low? We broke the high here. We didn't even trade anywhere near this low. So now that we know we broke that high, we're looking for our next high with two red candles. This is not significant market structure for me, but this is. Why? Because it's followed by two red or two down candles. So knowing that we broke here, this is your previous high, this is your next high. What is the lowest price point in between those two highs? It is right there. And again, did we trade above this high or below this low? Because we can't confirm this is your low yet. So why can't we confirm that as our low? Because in real time, you do not see any of this. You're thinking that this is going to be our low and that we're going to crack this high, going to break it, but we very well could come all the way back down here and break this low. And then that means we have a market structure shift. So we cannot confirm market structure until we have that clean break followed by two red candles. So we see now, if we continue on, we broke this side, we have our new high followed by two red candles that are consecutive. Second one, trading lower than the first one. What is the lowest point between this high and this high? It is this low here. So now we have that. So again, we have to ask ourselves, do we trade below this low or do we trade above this high? We absolutely trade above this high. followed by two red candles. Second one, trading lower than the first. So again, let's carry on with our path tool, knowing that this is our next high. What is the lowest point in between these two highs? This point here. So again, you have to ask yourself, did we trade below this low or this high first? We traded above this high. So again, followed by two red candles. So now we know that between these two highs is our lowest low. And now, do we continue this uptrend? If we were to continue this uptrend, we would be looking for this. But we don't. We actually break structure back to the downside. And this is now signaling our market structure shift right there. So now, once you have a market structure shift, you know that the uptrend is over with. So what do we look for now? We look for our low, followed by this time two up candles, two green candles. Remember, in the uptrend, we were looking for two red candles, but in the downtrend, we're looking for two green candles. Two green consecutive candles. The second one must be trading above the first one. So now, start back at the high. We see our market structure shift. We find the next low followed by two green consecutive candles, the second trading above the first. So now we see that this is our first low to be put in. Now, again, we have to ask ourselves, do we trade below this or trade above it first? We trade below. So what is the, do we create two green candles right here? No, we don't. So just like in the downtrend that we showed before, this is the same one, we would have to actually go way down here for our next low because it's followed by two green candles. We did trade lower, but it's not followed by two green candles here. So this is our next low. So what is the highest high between this low and this low? Same example we did before, so you already know. And that is your market structure path. So on higher time frames, this is, I would say, a little bit easier. Let's go down to some lower time frames because lower time frames have a lot of structure and they love to flip flop back and forth. So let's just take this last leg of structure that we see here and let's map out the 15-minute time frame here. So if we were to start our structure, we'll start here at this low. Actually, we'll change this to white so you can see this through the green and red candles. So we do see at first, we see our first high followed by two red candles. And then we see another high followed by two red candles. Let's zoom in a little bit on this so you can see. So this is going to flip-flop a lot more, but we're still going to use the same rules. It's no different, very mechanical. So this is your new low put in between these two highs, followed by those two candles. So this is our high. Do we trade above this high or below this low first? We actually trade below this low first. Everything in between this is internal to this low. So now we have this low that's followed by two green candles. So it's confirmed low as significant market structure. So you have that market structure shift from here to here. Now we continue back up. So again, we're looking to what? We're looking to ask the question again, do we trade below this low or we trade below above this high. You're not just going to grab this high right here and start all over with this. No, you have to go with what was your last high and low, because that is market structure. These are your swing points. All of this mess is internal to until you break this high or break this low. So do you see anything over here? No. Do you see? Yes. We break with this big candle, this high, then followed by two red candles. Yes, it is. So now we're having another market structure shift. We're flip-flopping a bit. So again, the question to ask yourself, do we break this high or do we break this low? We do not even come down to this low. We do break the high. So is this high broken with two red candles? Yes. So this is confirmed as our high, which confirms this, the lowest point in between these two highs, as our low. Now, do we go here and automatically choose this as our next low? No, we don't. We can't do that yet. It's not confirmed. Why? Because in real time, if you're right here and you're thinking that this is going to be the next low, that's not confirmed because it hasn't breached this high, it hasn't breached this low. And for all we know, you might think that, oh, right here, this is our low and we're going back up again. It doesn't matter. Why? Because you could come up again to go right back down and have a market structure shift here. So you have to understand that you're always asking the question, which side did you breach first? Did we breach the high here or did we breach the low? We obviously took the high first. So go back in. Now that we know this is our high, followed by two consecutive down candles, we know that this is our lowest point in between these 2 points here. So this is your new confirmed low and your newly created high. Now, let's expand this. We can see here, we just ask ourselves the question, which one did you break first? Which one did you trade above or below first? Obviously, here's our next confirmed high because it went above the swing high. We are always reading this from left to right, and you can never count anything in between until you break your new high and your new low. So again, we continue on. We know, starting back from here, that this is our new high. What is our lowest point in between those two? It is here. New high followed by two red candles. And again, we stop there until one of these points is traded above or traded below. At this point, we have another market structure shift on the 15-minute. We were in this uptrend, but now we switch back to bearish. So we take that high again. And do we have two green candles right here? Yes, we do. So now we can confirm that as our low. Now what we're looking for is, do we just automatically go like this? Every time you see this uptrend and you see two, no. Why? Why is this not swing structure? Because you're not following the rules. This was your last high. This was your last low. Did anything in here break the high or the low? No, it didn't. So let's erase this and let's start back the correct way. We break the low here, two green candles. Now, obviously, we did not come back for this low. Obviously, we broke the high way over here. So again, we start from here. We broke this, so we follow it. 2 consecutive down candles. This one's barely trading below it, but it is. So it's a mechanical roll. We use it. Even though it's a barely trading below, you see that this candle here traded below this one. It's a mechanical roll. Now, can we call this our low yet? No, we can't. We have to stop. Stop right there. This is our previous low. This is our newest high. Confirmed by the 2 red candles. Now, which one did we break? Obviously, we didn't come back here. We broke this one. Great. So now that we broke this, wrong tool. Now that we broke this, we can now look for our 2 red candles down, which is right here. So what's the lowest point between here and here? Right there. Now we can confirm that as our low. Because of this break of structure, we have to trade above this or below the previous. So here, we cannot choose this as our next low yet. Why? Because we have to realize, did we trade below this or above this first? That's the question to ask first. Yes, we traded above it. However, do we have 2 consecutive red candles? We don't right here. But it doesn't have to be right here because we have 2 right here and we have 2 here, right? So what is the lowest point between these 2? Is this one here. So again, once you choose that new high, did we break below or above first? We actually broke below first. So now we have another market structure flip-flop. This is our new low. Market structure shift. Now we know new high, new low, followed by 2 green candles. Which one do we break first? Obviously, we broke back to the upside. Now we have another market structure shift, followed by 2 red candles. And again, the second red candle traded below it. Barely. Sometimes you have to zoom in to confirm, but it did. So now this is their new high. And again, once we have a new high, followed by 2 red candles, do we trade above this high or this low first? We traded above the high. So now, do we choose this as our low? Let's see. We traded here, 2 consecutive candles. So this is our new high. What's the lowest point between these 2? Right here on this green candle. Now, you would ask the question, what about this low? This is the absolute low, right? So here's how you can understand this using other time frames. Here's the 10-minute. You can clearly see that as a low. Here's the 5-minute. So the 5-minute clearly gave you nice structure, and this would be your low. However, back to the 15-minute. It is still the lowest point in between this new high, which caused the break right there. This is your new high, followed by 2 red candles in the uptrend. So yes, this would be your lowest point, not this one. Two candles. Did we break below the low or trade above the high first? We took the high, which the lowest point between this high and this high is this low here. Now we had that market structure shift clear as day because we don't trade above this high before we trade below the low. 2 up candles because we're changing back to downtrend. Stop there. And so on and so on. So this should give you a great idea of how to map out market structure on different time frames. Now, let's go down to the 1-minute time frame because the 1 minute is going to give you a lot of flip flop back and forth, and it's going to be the hardest time frame to map out. So let's do some examples that are going to be hard examples. So let's take from this high all the way down here. And you will see that it's not any different than what we just did on the 15 minute, because the 15 minute was also flip flopping back and forth from bullish to bearish to bearish to bullish. And what does that mean? And that's getting into our next lesson called expectational order flow. And I will speak on that in our next lesson. But let's go over this 1 minute time frame, and we are going to start at our high. We find a low with 2 consecutive green candles right here. Do we break this high, break this low? We break the low. The highest point between this low and this low, 2 green candles here, is this here. Okay, great. Do we break this high or break this low? We break the low first. Highest point between this low and this low is right there. Okay, so let's stop. Spread this out a little bit, make it clean. Do we break this high or break this low? Start trading below this low. So what is our low that has 2 consecutive candles that traded below? This low right here with 2 clean consecutive candles. What is the highest point between this low and this low? Would be this one. Now, do we trade above it or below it? Again, we keep on breaking down in this downtrend. Find the next lowest point with 2 up candles right here. So what's the highest point between this low and this low? Would be here. Now, do we trade above this high or this low? Again, over and over and over again, it's the same story. So what is this lowest low followed by 2 consecutive green candles? It's not this one. It's this one. So this is our new low. What is the highest high between this low and this low? Would be this high here. Again, do we trade below this newest low or do we trade above this high first? We take the low first. Now, this would not be our low because we don't have 2 consecutive green candles. The second one never traded above this high candle. So we skip this one and go to this low. So this is our new low. What's the highest point between these two? Would be here. Okay. Let's keep moving along. Now we can clearly see which side did we take first. We didn't take the low again. We took the high. So now that we know we took the high, we're looking for the uptrend version, which is 2 red candles. Took the high here. This is our new high, followed by 2 red candles. Clear. Now, once you have that new high, you have to figure out, ask yourself the question, do we trade above it? Do we trade it below it first? You're always looking for these 2 points first. We trade above it. What is the lowest point between this high and this high? Is right here. So now that we have our new high and our new low, do we trade below or above? We traded above it. Everything in here is internal structure. We don't care about it. So do we have 2 consecutive red candles? Not right here we don't, but right here we do, as well as right here. So we know that this is our new high. What is the lowest point between this high and this high? Be right there. So again, ask yourself the question, trade above the high, trade above the low. We took the high first. No consecutive red candles here though. So if we start here, we took this high, but we don't have 2 red candles. What do we do? We just simply skip this as significant structure and we go here where we have two nice red candles or more. So what is this high? What is the lowest low between this high and this high? You're right. This is the low. This is your next high. So again, do we take this high? Do we take the low first? We take this low. It's almost equal low, but we'll count it. So we will continue on from our previous high here. And we take the low. So this is an SFP or market structure shift back down. So now that we know that we're ending this uptrend, do we trade above the high again? No. Do we trade below this low? Yes, we do. And we have two consecutive green candles right here because we're changing to the downtrend. What is the highest point between this low and this low? Right there. So let's move it on. Now, all you need is your previous low and your previous high. Did we take this high? No. Did we take the low? Yes. Two consecutive green candles. Perfect. This is your next low. Highest point between this low and this low would be this high. Now, did we take the high or did we take the low first? We took the high first. Two consecutive red candles. So here's the high, followed by two red candles. So this is significant. So we're switching back to bullish after a bearish downtrend on the 1 minute. Brief bearish downtrend. So now we stop there. Is this your next low? I don't know. We can't confirm it. Why? Because you didn't ask yourself the question first. Did we trade above this high or this low first? We took the high first. So now that we know this is our high, followed by two red consecutive candles, this is our confirmed low. And again, did we take this low or the high first? We can see that we actually took this low first, barely. So we move that out of the way. Let's see if we did. Yes, we did. Let's zoom in a little closer so you can see. This is your low. We absolutely did take that low first. Let's move that back. So do we have two green candles? Yes, we did. So right now, it's still continuing. Right now, we have that market structure shift from here to here. So this is our new confirmed low. So do we trade below this or above this previous high first? It actually shifts back bullish, but it doesn't break. So it's a failure of a bullish uptrend. However, it is still our next high. So now we have a market structure shift here, which then we have another market structure shift here, which then we have another market structure shift down below. Now it's not going to be this one. Squeeze this up a little bit, zoom out. We can't count this one because we don't have two green candles here. We don't have it till down here. So the significant market structure would come from this. Again, you ask yourself, did we break this high or break this low first? We broke the low first, but the low has to be broken with a low followed by two green candles. So here you go. Now, did we break this low or break the high? So we had another bullish shift. So you can see how the 1 minute shifts wildly, whipsawing back and forth between bullish and bearish market structure shifts over and over again. So you don't have very clean uptrends and downtrends that last very long. Why? Because it's a low time frame. It's a quick time frame. Therefore, the uptrends and downtrends are going to be quick and they're going to shift quick. It's just the same characteristics of a low time frame. Very quick time frame, in and out. So Let's continue on. We break our structure here, 2 red candles. Now, do we break our structure to the low or to the high first? We break it back down. So we had that bullish shift again, back to the bearish shift. So we keep flip-flopping from bullish to bearish over and over again. And this is what you will get chopped up in if you don't understand how to read market structure very quickly and understand that your uptrend or downtrend bias can end in just a couple minutes. So let's continue on. Do we break this high or break the low first? Well, everything on this screen is internal structure at this point. So let's keep on going until we find that break. So we don't break on the 1 minute from this structure to this structure until we get way over here. Now we're looking for a high followed by 2 down candles. This is our high. So this is a great example of a bunch of internal structure from your swing 1 minute structure. So swings can look very tight or they can look massive, even on a 1 minute. But you have to understand that question to ask when you're right here in real time, this is your low in real time. You have to ask, do we break that low or break this high? We broke the high all the way here, followed by 2 red candles. Now, is this your new low? I don't know. Because if we're right here, we are looking at this high and this low. We have to break this high or break this low for a new swing structure. So I can't tell if this is our new low yet. Oh, we did take the high. So that is our low, followed by 2 red candles right there. So let's draw it in. High to our next high. Lowest point in between these 2 highs is on this candle here. Did we break this low or break this high? We took the high. Lowest point between these 2 highs here. Now, do we take this high or do we take this low first? We actually took the low first. So here comes another market structure shift, followed by 2 green candles, of course. Always have to have that rule. So now that we have this low and this high, do we break this low or this high first? We actually SFP this low. So what is the highest high between these 2 lows is this point here. And we get that another market structure shift. So we need a high followed by 2 red candles. Here we are right here. So this is our high, this is our low. Do we break the high or low first? We broke the high first. So knowing this high broke, but we have no 2 consecutive down candles here until we get over here. So this is our high. What is the lowest point between this high and this high? Is this low here? Ask yourself the same question over and over again. Did we break the low? Did we break the high? Did we break the low? We broke the low on this candle here and absolutely does have 2 green candles there trading above each other. So this would be your next low to have another market structure shift back down to the downside. Now, can we confirm this is our high yet? If we are in real time at this low, no. We have to wait for this low or this high to be broken first. Boom. We see the break there. Now we have to find the low with 2 consecutive green candles. And this would be your low. Now you can skip this because you have another low that has 2 consecutive green candles. So this is insignificant to this. You can draw it in if you want to, no big deal. So we'll go ahead and draw it in. But a lot of times I just go and skip those because once you get past it, it means nothing at that point. So this is your low. Highest point between this low and this low is right here. So did we break this high or this low? We broke the low. Highest point between this low and this low is right here. Did we break this low or this low? This high? We broke the high. So now we're having that bullish market structure shift again. Now we look to the next highest point with two red candles. No two red candles here, but we have them right here. So this is now your confirmed high. So again, we ask ourselves the questions. Did we break this low or break this high? We broke the high. So right here was the lowest low between this high and this high. It's here. Again, we break the high again. Two consecutive red candles. What's the lowest low between these two highs? It's this low. So now we're here. Did we break this high? No. Did we break this low first? Yes. So now we're switching back to bearish. So we take this and we find our first low point with two green candles right here. So that's the market structure shift right there, back to bearish. Now, did we break the high or break the low first? We broke the low. We need two green candles. We find it right here. So this is now our confirmed low. What's the highest point between these two? Is here. Now, again, keep asking yourself the same question. If you're right here, is this your new high? Are you going to draw this in like this? No. Why? Because you didn't break this low or break this high. All this is internal structure. We only care about swing structure. We don't care about internal or fractal structure. I'm going to teach you a way to read everything through swing structure on different time frames to simplify everything. And this is exactly how we do it. So again, let's finish this out where we currently are. Starting at this low, did we break the low or this high first? Obviously, we broke this low. Highest point between this low. Oh, wait, no, we can't use this low. Why? Because this is not two green consecutive candles. Now we can move to our next low. Do we have two green consecutive candles? Yes, we did, right here. So this is our low. What's the highest point between these two lows? Is here. Now again, take the high, take the low. We took the low once more. So we didn't take the low till way over here. We do have those two consecutive candles. They're very small, but it still meets our role. So what is the highest point between this low and this low? Be right here. So now that we have this low and this high confirmed, which one do we break first? We continue to break the low. We have this low follow with two consecutive candles. So what's the highest point between this low and this low? Is this one right here. Now, do we break this low or do we break this high? Obviously, are having another market structure shift back to the upside because we broke above this high, follow with two red candles. And that should give you plenty of examples on some different time frames to show you how market structure is drawn in a correct way when you only want to draw significant swing structure. And why do we do that? The reason is because if you are paying attention to all this internal structure, it's a bunch of noise. There's no reason to even pay attention to it. It will flip-flop back and forth even more than the swing structure does. So it will not give you any good signals. So what this does is filter out the noise and filter out insignificant bad signals. So I'm going to end it here because I'm sure this is a long video at this point now. And the next video I'm going to make will blow your mind. It's going to be getting into market structure, expectational order flow. And in that video, we will see the fractal nature of market structure on different time frames and how to correctly read market structure using 3 or more time frames.